Greetings, this is Kevin Jefferson with this week's trade theory for Tuesday, October 7th, 2025. We're looking at the Bitcoin chart here, and prices, as everyone who's been alive knows, that prices shot up to an all-time high. And of course, when price gets up to certain levels, there's always going to be some pullback or some selling off because people are fearful of losing the gains that they've made. Some people want to take off some of their positions. And then there's some people who are shorting that side of the trade thinking that the market's going to go down. So it automatically follows that after a major high, the price will pull back. We can look over here on the around the 25th of August, 14th, I'm sorry, 13th, 14th of August. Same thing happened. We had a new all-time high, roughly 123, and price pulled back significantly. And so it's doing the same thing here, which is what to be expected. So the question is, how far back will it go, right, before we can expect it to continue going higher? And so in my estimation, I believe that price could pull back to about the 115,954 level before continuing higher. Now it could go higher today or tomorrow, honestly, but I think that's a fair pullback point, 115,954.61. So that's the area I have targeted for my alerts to see if price wants to come back there and give us another possible buy entry opportunity. Okay, moving on to WTI crude. Price finally hit that third level for me that I had set many months ago. I had taken it off my charts, but now I'm kind of looking at where price is and what we can expect. And looking at these moves, I'm looking for price to pull back. It's reached new lows, but not lowest, like not all-time lows, but new lows in the recent weeks. And I have a pullback point, meaning that I'm expecting price to rise, or there'll be some buyers in the market at that price. Because think about it. So what I'm going to do with this video is share with you a little bit of the psychology behind the numbers or the charts as well. There is always fundamental information, which is your first principles or your first ideas about a particular asset, which drive your decisions, your hypotheses. And those hypotheses are how buyers and sellers line up. So depending on who has the greater amount of hypotheses on the sell side versus the buy side, or vice versa, that's which direction the market goes. So we're at this point to where price is this low. There's some buyers down here clearly who feel that price will not go lower before giving us a bounce. And so there are buyers there. There are people who are short oil, who are closing out positions. The same thing we were talking about with Bitcoin. It's just the reverse when something is trending downward. And so it's logical to see that price would expect to pull back. And that's actually a healthy thing for the markets, because that allows more people to get in at a fair price. And so 63.71 is roughly the pullback point that I'm looking at for oil before exploring another short sell on that. But oil has been behaving very well for us over the course of this year. It's actually given us a lot of good trades and a lot of take profits hit on the downside because oil is very weak as of late. So looking at a pullback point again of roughly 64 and some change, or 63.711 or something like that, 63.71. Okay, all right, moving on to gold. So gold is pretty interesting because it just was, announced on the news, or or been put out or discussed, that gold is not only just a safe haven currency, which it's always been, but it's starting to replace the safe haven psychological safety of the dollar. And so this kind of helps me understand, although I did, point to gold going higher and we hit some profits on the upside. And I think I spoke to even 4,000 at some point. I'm not sure. But what I'm thinking about gold is, I was wondering why, when the market's rallying, why is gold still rallying? Because gold is a safe haven asset. And so that means that, generally speaking, gold demand would drop when the market is rallying or when people are more aggressive in the markets. But it's been simultaneously rising with the indices. And so one of the reasons may be because people are going into gold as a safe haven asset, and bonds globally are starting to underperform as well. You see what's happening in France with their parliament and all of their government issues. That lowers confidence in their 10-year bond rates or 10-year bond prices. And so when people start pulling out of those assets, and they start pulling out of the 10-year treasury in the U.S., they have to park their money somewhere that's less volatile than the market, generally speaking. Obviously, gold can be very volatile because it's moved so much, but generally less volatile than the market and give them some stability and some growth potential. And so gold is taking that place, it seems. And so right now, gold is completely stepping away. Now it's starting to pull away from this EMA, which means that I'm expecting a reversion back to the mean, but it's not at a point where I won't even call anything. I'm just going to wait for price to pull back and then assess it later because it's gone so high. So gold is on a tear. If you're still in it, stay in it. And if you want to cut out some positions by selling off some, that's fine too. All right, going on to US 30. So the US 30 eventually actually hit our take profit that we set back on the 2nd the 2nd of September. And you see where I mentioned in a previous video where I took my stop loss from down here on the 2nd as price moved up, and my entry was here, that I eventually moved my stop up as price went up to where no matter what happened in the market, I would have gotten out of the trade in a positive. And so that's how I protect my risk, or how you protect your risk while still allowing an asset to continue to move and play out. And so it finally hit about 3 days ago. On Friday, it hit our target from setting September 2nd. And now I will assess this again, and I'll set a pullback point next week that I'm looking forward to get back in possibly. Okay. NASDAQ 100 hit our take profit a week ago. And so I'm just setting the pullback points now, looking for a possible pullback point of roughly 24,104. Right around there is what I'm looking for price to pull back to before exploring another buy entry opportunity. And then rounding it out with the S&P 500, that hit our take profit as well a while back. And so I'm looking at pullback points to possibly get into more positions, which is roughly around the 65, 38, 54 level. So we'll watch those over the coming days and see what the market allows for us. And until next time, I hope you have a wonderful week and happy trading.